So, good morning and good afternoon and good evening, everyone, and welcome to today's webinar. It's my pleasure to open this session as part of our ongoing efforts to strengthen Mongolia's capital markets through knowledge sharing and international collaboration. We are honored to welcome our distinguished presenters, Ms. Deanna Morris and Ms. Chiara Amato, Economic Affairs Officers from SCAP. They recently conducted an important study on Climate Invest project, building bankable green project pipelines in non-infrastructure sectors of Cambodia, Mongolia, and Thailand. Their insights will be invaluable in helping us understand how Mongolia can enhance its sustainable finance ecosystems and attract green investments. This session marks the first of our Capital Markets Digital Transformation and Sustainable Development webinar series, with a total of 11 sessions planned for 2025. We look forward to engaging discussions and learning how we can apply these findings to Mongolia's capital market. With that, I would like to officially welcome our presenters and look forward to hearing their insights. Deanna and Chiara, the floor is yours.
Thank you so much, Ergo, and a big thanks to the Mongolian Association of Securities Dealers for having us today and to have this opportunity to present some of our findings from the Climate Invest project that we've been implementing in Mongolia. I will just ask our colleague Chiara to share the slides and just maybe a quick introduction on myself. I'm an Economic Affairs Officer at SCAP. I'm leading some of our work in terms of capital market development, particularly green capital market development and banking sector, green banking. In terms of our agenda today, Chiara, we still can't see it. Great, it's coming. Great. So in terms of our agenda today, we'll be covering a few different things. So first, I'll give you a quick overview on just the Climate Invest project overall, so you have a little bit of a background on what we're doing, why we're doing it, and some of the key headline findings across the different countries that we're working, because it's not just Mongolia, it includes Cambodia and also Thailand as well. And then Chiara will go into some of the key findings, particularly in Mongolia. And then we'll discuss some of the recommendations and really have a lot of time at the end, hopefully, to discuss with you so that you can share your insights, your thoughts, what type of policy recommendations should be uptaken, and what kind of initiatives we can work with stakeholders like you to move forward green finance in Mongolia. Next slide, please. So just in terms of kind of the overarching and why did we decide to initiate this project across these three countries? Of course, we know that there are overarching challenges in mobilizing climate finance across the Asia-Pacific region, not only in Mongolia. And there's a massive financing gap of $5.8 to $5.9 trillion is needed to fill the financing gap and meet the nationally determined contributions under the Paris Agreement. Of course, there is a challenge in terms of gaining private finance, and private finance is going to be the driver of green investment within the region. Of course, governments themselves will budget for some adaptation and mitigation projects, but the private sector is really going to be what drives us to meet our nationally determined contributions and the commitments under the Paris Agreement as well. And of course, there's a lot of regulatory barriers, which we'll discuss in this presentation, that are kind of binding constraints to the market that are holding us back from achieving green investment and really mobilizing investment in this area. Next slide, please. So in terms of the Climate Invest project, the previous slide showed you kind of why we've decided to engage in this. Our project objectives was to really support the scaling up of sustainable finance and support governments to develop policies and financing instruments which can catalyze investment to bridge this financing gap that I had mentioned. Through this, we're at the first stage still of this initiative, and that's really the research stage. So really understanding, what are the key constraints, where are the key challenges in each of these countries and across the region. And through that, what we've done is we've undertaken an investment analysis report, looking at what types of investments have happened over the last few years in each country. An investor priority analysis, so where are investors actually interested in investing, and a domestic banking analysis. And all of these have provided kind of key challenges, key opportunities, and recommendations going forward. And the next phase of this will really look at our work with the governments and key stakeholders like yourselves to really try to adopt these recommendations, find the low-hanging fruits, find the key opportunities to be able to mobilize finance, but then really result in the execution of finance deals for green projects. And as I mentioned, this isn't just Mongolia. We've also done studies across Cambodia and Thailand as well. And the next few slides, I'll give you kind of the highlight numbers and assessment that are consistent across all the countries. But I will just mention, of course, all of these countries are very different. As you can understand, Mongolia is very unique in itself. Thailand is very much advanced in the market. However, despite these differences, there are key findings that we've seen that are pretty consistent across all of the countries. And I've categorized those into kind of 4 key areas. The first being, the financing gap persists in these countries. We mentioned the large numbers of trillions, but in each of these countries, there's a $7.8 billion financing needs in Mongolia, 11.5 billion in Mongolia, 7.8 in Cambodia, and over 150 billion in Thailand to meet these NDC goals. So those are quite large gaps, which of course cannot just be financed by the government alone. And of those within the infrastructure sector, the non-infrastructure sector is really where financing is lacking. Less than 10% is directed towards agriculture, water, and waste management, which is also key to mobilizing our climate finance, but also meeting the needs within the NDCs. Where the financing is mostly flowing is to energy and transport infrastructure. So this is where a non-infrastructure sector, there's an opportunity for growth there as well. In terms of policies and regulatory barriers to green investment, net zero targets remains a challenge. Mongolia has not yet set net zero targets. You have set targets under your NDCs for carbon reduction, but no net zero targets. And one of the recommendations here that we've also seen from Thailand, which has set net zero targets, but has not set sectoral targets. So this is an opportunity for Mongolia to both, in their next round of NDCs, which is happening this year, they're due, to be able to set these targets and also consider sectoral targets as well. Taxonomies remains a challenge across countries, even countries that have well-developed taxonomies. The strengthening of those taxonomies and implementing those taxonomies, particularly by the private sector, really does remain a challenge. And fragmentation across policies. So having certain policies that support fossil fuels, and while you have other policies that are trying to curb fossil fuels, really creates some challenges as well. In terms of private sector participation, there are constraints, and these are things that maybe you yourselves are also facing, and we'd love to hear from you on this. But some of the key kind of highlights on this was high upfront cost to climate projects. One of the things that we are advocating for is for climate projects that are particularly run by governments to prioritize ODA funding in the setup costs, so the environmental impact assessments, the proof of concept, while then preparing the project and getting it ready for private finance or other types of financing. Lack of investor-friendly policies, tax incentives, blended finance, and also unclear project pipelines and limited monitoring, reporting, and verification mechanisms. And then finally, sustainable finance mechanisms must be strengthened. So risk-sharing mechanisms such as guarantees, concessional finance, not having those really reduce investor confidence. And this is something we've heard across markets, no matter how developed, if it's in Thailand or Mongolia or Cambodia. risk mitigation is key for all investors. Next slide. The next slide, this just shows, again, some of the kind of findings across the different projects. You can see that Cambodia, Mongolia, Thailand, we're all at very different stages in terms of the green bond market. Mongolia with its first issuance in 2023. Cambodia has had a few issuances in the last few years, while Thailand is quite advanced in that area. Net zero targets, private sector incentives, and the taxonomy. And you see that actually it's not a one step, 1, 2, 3. There's things happening kind of in different orders, but really these are kind of a few different things that are enablers. Having a robust capital market, having your net zero targets, and having a taxonomy in place is very important to mobilize these financing needs. Next. And then in terms of recommendations, and these are, again, the high-level recommendations across the countries. We'll get into the specific Mongolia insights in the next few slides. But in terms of kind of the high consistent recommendations that we have is enhanced coordination across government. So particularly when you're looking at the environmental aspects, a lot of the NDCs, a lot of the decision-making is held with the Ministry of Environment. It is critical that agencies like Ministry of Finance, Central Bank, Energy, all of these come together, particularly when we're talking about finance. And we see that this is quite fragmented in many of the countries. Screening mechanisms for climate finance projects to be able to prioritize these projects based on countries' NDC targets is needed. We have a few case studies to discuss how to do that. And also investment tracking. So once the investment has taken place, tracking mechanisms for that as well. The opportunity to develop more robust capital markets, such as green bonds, sustainability-linked loans, and being able to reduce the cost of those transactions through tax breaks, subsidies, for verification costs, concessional lending, other options as well. Development of climate finance projects, products, particularly in the banking sector, to be able to support smaller stage SMEs as well, and incentives for private investment, again, with the carbon pricing, tax breaks, concessional lending. Alignment with international climate finance standards. We talked a lot about reporting requirements in IFRS S1, S2. I know that many of you probably are already doing those types of reporting, particularly on the S1 side. We are working with MSFA to develop a disclosure guidelines and also a template to support this right now. And that should be out in the next few months. So stay tuned for that. We will be having some sessions on that as well. And the MRV system is something that is a consistent challenge, and we've seen this particularly in Mongolia. But I will stop there and hand it over to my colleague Chiara to discuss a little bit more specifics on what we've found in Mongolia. Oh, you're on mute.
Sorry, let me share my, I hope that you can still see my slides.
Yes.
And you can hear me now.
Yes,
Perfect.
now great.
Thank you again, Dan. Thank you, Dan, and thank you again, Urgo, for the invitation. We are very pleased to share our recommendations with our audience today. And again, we encourage you to also ask any questions later during the Q&A. Please feel free to write any questions in the chat. I will stop briefly in the middle of the presentation in case there are any burning questions, but we will have a longer discussion after. As Deanna said, I'm going to share a brief overview of the main findings of the 3 reports that we prepared. The first one is on climate investment trends in Mongolia, but there is also an analysis on investors' priorities, and then briefly also an assessment of the domestic banking sector. Now, just briefly to start with an overview of how climate change risks and impacts are related to climate investments. And I'm sure that you're already familiar with these slides, but what we're trying to say is that Mongolia, like many other countries in Asia and the Pacific, is highly highly affected and highly exposed to climate impacts. And we have seen from data from the last 70 years that there has been a consistent increase in the temperature above the 2 Celsius degrees. And this has been accompanied by an increase in the frequency of flood and drought, as well as floods in the capital. And on the other side, we see that there is a consistent reduction in terms of the frequency and magnitude of rainfall. And these events are all expected to affect significantly Mongolia's economy, which still relies predominantly on agriculture and mining, which are 2 sectors that are highly exposed to these risks. So if we think that mining, for instance, still contributes to 25% of Mongolia's GDP, and agriculture on the other side is contributing to yet another 10% of the GDP and around 25% of Mongolia's workforce. So we see that climate change risks and impacts are actually expected to have significant economic losses in the future. And this is just a short slide to share how the intensity and the frequency of these events has increased over time. But in addition to physical risks, Mongolia is also highly exposed to what we call transition risks, which are essentially risks related to the transition from a predominantly brown economy to a more low emission and low carbon economic growth. And so these are risks that are coming from, let's say, the introduction of new policies and regulations. This can be, for example, the introduction of carbon pricing, or it can be the introduction of new clean energy technologies. Or it can also refer more in general to risks coming from businesses having to adjust their operations to integrate more sustainability aspects, or it can be investors who decide to shift their allocation from energy, so from emission-intensive sectors to more climate resilience industries. So the combination of climate and transition risks is going to be massive in the coming years, and is going to affect significantly the structure of Mongolia's economy. But having said that, Mongolia has shown strong commitment to addressing climate change impacts, and all of these strategies and policies are strongly anchored in Mongolia's NDCs. That, as Deanna mentioned, is currently being updated, and it is expected that this will be finalized in June later this year. But based on the current NDC, Mongolia has already committed to reduce total GHG emissions by 22% by 2030. And again, here there is a strong focus on the energy and agriculture sectors to achieve this target. Now, there is a strong link between climate change impacts, NDCs, and financing. And the reason is that there is a significant amount of investments that are required to achieve NDC targets. But according to the current NDC, we don't have an estimate in terms of how large is the size of investments that are required to achieve the NDC targets. And according to the NDB, this is expected to be around $11 billion until 2030, which is roughly divided equally between climate mitigation investment and climate adaptation investments. What we see in this picture is that out of this 11 billion, around 50% remains unfunded. So it's showing that there is a 50% financing gap, and almost 90, if not even more than 90% of this amount is all in climate adaptation. So essentially, there are two main messages coming from here. And the first one is that there is an urgent need to scale up specifically climate adaptation investment. But the second one is that regardless, if we look at the size of investments, this $11 billion, we see that this is far above the capacity of public finance alone to meet this target. So it is also a call for action for private finance, as Deanna mentioned earlier, to scale up the current climate financial flows, but to especially realign more investments in private investors' portfolio to align this more with Mongolia's NDC targets. So now that we went through a brief overview, I'm just going to share a few trends based on the overall climate finance landscape in Mongolia. And what we see is that so far climate finance in the country remains largely dominated by public finance and international climate finance, which includes both bilateral donors and financing provided by MDBs and DFIs. And out of this number, public finance still holds the lion's share. And this is still less than 1% of the GDP, so roughly $50 million per year. And this is actually below the government's commitment to allocate 1% of the GDP per year to climate expenditures, and already includes funding and loans and grants received by MDBs and DFIs. So essentially, this is showing that there is much more financing that is required to meet the NDCs, which will have to come from private sources. And on the other side, what we see is that private finance for climate remains limited, and the majority of it is still coming from the banking sector. This essentially is showing differences in terms of the broader financial sector development, where from one side we see that the banking sector has been developing significantly and including the green segment. And on the other side, we see that there are still underlying challenges in the traditional capital markets related to limited liquidity and debt. But having said that, we've seen that there has been quite promising developments in the bond market recently. Mongolia has issued a debut green bond by Han Bank in 2023. This was followed also by additional green but also social bonds by Han Bank in 2024. And we saw that the Golomb Bank also issued its first social bond earlier this year. So this is essentially showing that there is a growing appetite for these instruments, and that the market also is diversifying in terms of instruments, in terms of issuers, and especially in terms of also investment opportunities. And even though at the beginning it was especially foreign investors, so DFIs and MDBs, that were the main investors in the green bonds, we hoped that with time there is going to be also more participation and more interest from local investors, especially building on the success of Han Bank's green bond issuance, which was largely considered one of the most successful green bond issuances globally. So just briefly on the equity side, as I mentioned earlier, there hasn't been a strong participation, stronger contribution from climate equity, which is largely reflecting challenges in the existing equity markets. And I should also say here that there isn't official statistics in terms of the volume of private finance aligned with climate targets in Mongolia. So this is actually not allowing us to also understand what is the volume of finance that has already been mobilized and how far we are from reaching the targets. But what we can see is that there are still promising examples from organizations, including InvestCorp or other international partners that have been taking steps to integrate more climate and sustainability aspects at the core of their investment decisions, including different structures and instruments. So InvestCorp has been focusing on waste management sector, looking also at impact investing. We see that cleantech has been focusing especially on clean energy, including wind and solar energy. And Microvest was one of the first private investors in Han Bank's debut green bond issuance. So I've shared some of the brief trends and figures on Mongolia's climate investment landscape. But what this is essentially telling us is that there are obviously barriers, both regulatory and policy barriers in the current ecosystem, that are not allowing more climate finance deals to emerge. So I'm going to spend just a couple of slides to go firstly through the policy and then the regulatory landscape. And I know that I mentioned earlier the NDCs, but there is a few additional policies that Mongolia has already put in place. There is the National Adaptation Plan, the Mongolia Vision 2050, there is the Public Investment Plan, and so on. And what we see is that there is right now what we call a fragmented policy landscape. This essentially means that what we mean with this is that even though these documents are there aren't any formal coordination mechanisms to bring together all these different ministries and institutions who have a mandate to integrate climate aspects across their policies. And so what happens is that there is this lack of coherence and alignments, where from one side you have the NDCs, and on the other there is still energy policies that are incentivizing coal-based investments. And so they're actually increasing the cost for early adopters who want to switch to clean energy technologies or move their investments to allocate more investments to climate deals. And on the other side, what we see is that even though there are enough documents in place, we are still missing long-term net zero targets. And this is essentially sending mixed signals to the market in the sense that there isn't a clear commitment at the government level to the transition in the long run. And so any efforts to try to increase more private finance for climate is not going to go a long way unless some of these inconsistencies across incentives and sectoral strategies are resolved. So I'm going to move on now to the regulatory landscape. And what we see here actually is that Mongolia has been put in place quite a comprehensive package of reforms in the last 10 years. We've seen the development of the roadmap and then the taxonomy. Mongolia was actually one of the early adopters of the SDG finance taxonomy globally. So some of the lessons learned and the successful factors of this experience are also related to the fact that there was a strong focus on ensuring that these documents are aligned with international best practices and standards, or if we think about the alignment with the EU taxonomy. And secondly, there was also, Mongolia also managed to successfully leverage support from development partners, especially at the beginning of establishing its green bond market, which allowed essentially to encourage more issuers and investors to come to the market. And then finally, the fact that there was also regular monitoring and review of some of these regulations, for instance, to include additional sectors under the taxonomy and to also look more into transition aspects. This is obviously a working process, and we know that the taxonomy is still under implementation, but we can see that there has been positive developments also in terms of the sustainability reporting guidance in the last 2 years. Having said that, there are, of course, still barriers, both in the policy and regulatory frameworks, which essentially are increasing the cost for issuers to issue climate finance instruments. So I've summarized some of these barriers here, and I think that this slide is going to be especially relevant for our audience today. But what I would like to note is that most of them are not specific to Mongolia only. But what is actually, this is something that we keep hearing over and over again in our conversation with issuers in Asia and the Pacific. So it's also symptomatic that these are broader challenges related to establishing and scaling up these markets in the region. So I'm going to now go more into detail into some of these barriers. And the first one is, of course, the high issuance and issuance cost related to climate finance instruments, in this case, particularly green bonds, compared to traditional investments or vanilla bonds. And this is often related in the case of green bonds to the additional cost of developing the green bond framework, second-party opinion, the external review, and also indirect cost related, for instance, to the development of the project pipeline or changes to the overall business operations. For instance, in case the issuer has to adapt to be able to measure overall GHG reduction, emission reductions, and so on. And these costs tend to be especially high for smaller issuers, particularly smaller companies. So it becomes de facto the main reason why they're not able to come to the market. Now, in addition to high cost, there is also issues around capacities, particularly for first-time issuers or in early stage markets like Mongolia, where there has been only a limited number of issuances. And this reflects essentially refers to limited capacities across the bond issuance process. So the identification of eligible expenditures, managing the whole bond proceeds, and then being able to coordinate the whole monitoring and reporting process. Now, in terms of supply-related challenges, there is also the lack of advantages of issuing green bonds over vanilla bonds because of this additional cost. And so issuers want to be compensated for these extra efforts and costs. So the high cost of capital remains one of the main barriers when it comes to considering different alternatives. There is also issues around limited awareness. On the regulatory side, the taxonomy is still under implementation. So again, the lack of standardized guidelines and especially sectoral guidelines to easily verify alignment with the priority sectors covered under the taxonomy. This can be easier for sectors including energy efficiency or housing, but it's especially harder, for instance, for adaptation. And on the demand side, what we hear from issuers is that sometimes it's not the lack of available projects. Even in cases when there is enough supply of deals in the market, the main barrier is actually the low demand from local investors. And I'm going to come back to this point later when we'll discuss more in details the findings from the report on investors' priorities. And now just one last point about the data architecture. What we see in Mongolia, that Deanna was also mentioning earlier, is essentially that there is a gap in terms of available and accessible data on energy statistics, can be energy efficiency, or even on GHG emissions. And this is especially important for issuers, but investors as well, because when this data is not available, then it becomes harder to have robust assessment, that have a reliable baseline or adequate benchmarking, and it becomes harder to also track progress and impact of these investments based on standardized metrics. So what we heard is that from some investors is that when they don't have this information, they're forced to rely on regional data from other countries. And of course, we know that Mongolia's context is quite unique in some sense. So what can be done to address some of these barriers? And the main focus here is to essentially create a more enabling policy and regulatory environment that allows to create a level playing field, so that essentially from one side it reduces the cost for issuers, and on the other side it also makes climate deals more attractive for investors compared to traditional investment. So this essentially here is including a set of recommendations that are at the intersection between policies, regulations, stakeholder engagement, and also strengthening the data architecture. So I'm going to start first with the policy side, and I will focus especially on the next, on the updated NDCs. And the first one that Deanna mentioned earlier as well is about developing a credible net zero target and accompanying timeline, and to have also sectoral targets associated with this net zero target. So here the new NDC provides an opportunity to scale up the level of ambition and to also make sure that financing issues will be at the center of the NDC implementation. What this means is essentially having a robust NDC financing strategy aligned with these NDC targets that also clearly specifies what is the volume of investments that are required to achieve these targets, and where these investments should come from, whether it's from public finance, private finance, international, and so on. And related to this point is also the importance of having a robust pipeline of NDC-aligned projects for both public and private finance. Now we're going to hear after from some case studies in the region of other countries that were able to put in place a strong NDC financing mechanism, and how this and what was the system that was put in place and how this aligned with the overall targets. I'm going to now move on briefly on the regulatory side, where the focus here is not so much on the development, but rather on the implementation of the existing regulations. So this is on disclosure, but especially on taxonomy. And here having more standardized guidelines across sectors and especially MRV tools is going to be critical to essentially provide a common language to verify easily the alignment with the priority sectors in the taxonomy, and to also make it easier for issuers and investors to report against these sectors, against these criteria, in a way that also allows to reduce some of the cost, some of the time and efforts involved, and allows to really provide a common language. So to really also improve more trust and confidence in the market. And here capacity building is going to play a critical role. And what we mean with that is essentially building the technical and institutional capacities of the regulators, but also the technical capacities of investors, issuers, and local verifiers, or essentially other stakeholder actors involved on different fronts of the investment cycle. And then finally, on the coordination side, the focus is to very much bring together investors early on in the discussions, and particularly try to co-create and co-design these project pipelines in a way that they are aligned with the NDCs, but that they also reflect investors' priorities in terms of sectors, but also their risk-return profile. And then finally, in terms of the data architecture, again, strengthening the overall statistics around the volume of climate finance, and especially private finance that is mobilized in Mongolia, in a way that it allows to also understand how large is the current gap and where we should try to mobilize additional finance to address, to essentially achieve the NDC targets. And then secondly, also work more on addressing data gaps related to GHG emissions and energy statistics, which we understand some of this is already being collected, but is not publicly available. So I'm going to hand over to Deanna now to go more into detail on the case study. Deanna, over to you.
Sure. So we have two case studies, kind of just going through some of the different recommendations from other countries, but also building on some of what Chiara's just presented, particularly as she was mentioning the need for robust policies and regulation. In the case of Cambodia, they're still at a very early stage as well, similar to Mongolia. And in Cambodia, what we've seen is policy and regulatory reforms have taken place. ASCAP has actually supported them in a few of these, particularly the Cambodia Comprehensive Policy Framework on the Development of Government Securities. They've just passed this, I think, in 2023. So that's for the entire securities market, but within that framework, they've particularly added a green GSS plus bond aspect to that government security framework, policy framework that they've developed. So really recognizing and indicating to the government that moving forward, they will be looking not just on issuing vanilla bonds, but also green bonds in the future as well. They are now also in the process of developing their sustainable finance bond framework, which should be hopefully finalized this year and get a second party opinion on that, even though their issuance date is looking more towards 2027. They're getting a lot of these things in place and ready based on their NDCs. And this is all done based on what their NDC priorities are, which are included in the framework as their use of proceeds priorities. Similarly, at the same time, the central bank has developed the Sustainable Finance Roadmap, which is forthcoming, which looks at all of the different areas within sustainable finance that need to be mobilized within the ecosystem to create more robust mechanisms. So that includes the development of a taxonomy, the development of disclosure guidelines, many other things as well, but some of those are the kind of fundamental aspects of the action plan that has been developed. And that's more so on the government side. So you see really the role of the Ministry of Finance here, also the central bank, also Securities Exchange. And when we start looking at the private sector, this is where we've been working with the Securities Exchange regulator of Cambodia to develop a sustainable bond accelerator. And I will say that this accelerator program is not appropriate for all markets, more advanced markets. It would be less appropriate just because then some issuers might be getting support while others would not be. So that can create a little bit of an imbalance in the market. But for countries like Cambodia, like Mongolia, where the market is still very nascent in the issuance of green and sustainability bonds, this is a perfect opportunity where we've brought together international organizations like us, ADB, and GGGI, along with investors like ADB, again, as an anchor investor, but also CGIF, which is ADB's trust fund that provides guarantees, Guarant Co that provides guarantees. And what we do is we provide the technical assistance training to the private issuers in the market. We support them in their bond framework development. We provide co-financing for the second party opinion to reduce the financing costs associated with issuance. And we then also support them by bringing in partners like Guarant Co, CGIF, and ADB to also mobilize that investment. So it is a comprehensive approach to really accelerate bond issuance for those who are looking to issue in the market. And we've seen already 1 issuance under the accelerator and 3 more are coming this year. So definitely, if you're interested in that, you can keep your eye on Cambodia as the issuances start to come out actually at the end of this quarter. Next slide, please. In terms of the NDCs, we keep mentioning that the nationally determined contributions are due this year. They are kind of the benchmark within the Paris Agreement to achieve our goals and our climate goals. And one of the challenges that we see, particularly at the government side, is that the fragmentation of plans, policies, and the fact that NDCs are not project-based. So you have a lot of net zero targets and priorities within the nationally determined contributions, but how to finance these and what projects are underlying that are not there. And this creates a real barrier in the sense of where then is investment able to flow. One of the, I think, good practices that we've seen in the region is in the country of Tajikistan, where the Asian Development Bank has been working with Tajikistan's Committee for Environmental Protection. And as what I mentioned earlier is that the NDCs are usually embedded with the Ministries of Finance, Environment. But this particular approach that they took really developed a financing plan. They brought together a group of government line ministries to be able to discuss this. They developed costing, so ensuring that all of their NDCs were costed. Not all countries' NDCs are costed. They assessed the budget allocations within the government that could be used, and also financing opportunities like grants, loans, equity investments, and other opportunities where there was a lack of financing and how those could be mobilized. And then they also included this with structural reform processes within the government, again, identification of funding sources, and then collaboration along the line ministries. And what happened as a result of this is that they were able to create an NDC climate finance plan that was robust, that helped the government to mobilize resources, but also prioritize which projects should come first. They then developed this kind of pipeline of projects and then could mobilize the financing based on the priorities. So I think this is a very good example from the government side of how they can replicate this and do this in other countries as well. So I'll stop there on the 2 case studies and hand it back to you, Chiara.
Thank you, Deanna. I'm just going to move on now to our investor priorities report, since I know we're running a bit behind time. But essentially what we see here is a summary of the consultations and the survey that we had with investors last year. And this essentially includes both local and international investors, as well as MDBs and DFIs. And one of the common barriers that came up in these discussions frequently was the fact that some of the challenges that investors face when it comes to climate finance deals, these are actually related to broader challenges in the existing investment climate, investment environment in Mongolia. So challenges in the traditional capital markets related to low liquidity, market debt, and maturity of the market, and especially the low liquidity of the secondary market. But there is also challenges related to the limited market infrastructure, low diversification of instruments that are supplied to the market, and especially barriers for foreign investors who want to come to Mongolia. So not just for the climate sustainable segment only. But when it comes to climate deals, one of the main challenges that we hear is related to the growing accusation of greenwashing. So investors need to be reassured, need to have more certainty in terms of issuers' credibility. And there is actually growing interest in certifying the credibility, not just of the instrument only, but of the entity of the issuer itself. And this is often followed by challenges, coupled with challenges related to the lack of financial benefits of green investments, of green deals, compared to traditional investments. So what this means in practice is that it is financial considerations that are the main reason behind investment allocations. And so investors will not automatically shift their investments to climate unless this means that there is an expected higher return or financial benefits. And what we see in Mongolia and most other countries that are at the early stage of establishing the market is that there is a very limited, if not no, investments with a dedicated climate or sustainability mandate. And in Mongolia, some of the other challenges that we heard are also related to the additional cost and efforts required on the investors' side related to identifying and screening green investment proposals, doing all the necessary due diligence to verify the greenness of these investments. And this becomes all the more challenging in a context where there is a limited data availability, particularly in the energy sector, but we also heard challenges in waste management and other sectors that otherwise would have promising opportunities for climate. And then finally, in terms of the supply side, one of the challenges that we hear is also that even when there is enough supply of projects in the market, these often do not meet the risk-return profile of investors. And so there is a lack of robust, bankable project pipelines in the market. Now, the good news is that we can see that this environment, that this outlook is changing, and there is a more and more interest from local investors to shift their capital towards towards climate investments. So we have put forward here a set of recommendations that essentially look, from one side, at strengthening the existing capital market. There is also something about looking at the role of financial incentives. And then the third one is, again, on strengthening the partnership to bring together government, regulators, investors, and project owners. So just briefly on the first point, again, strengthening the overall investment climate to attract foreign investors and especially investors with climate finance mandates. In terms of the incentives, the focus here is to really try to increase the attractiveness and the competitiveness of climate investments compared to traditional investments. And here an example can be the introduction of tax reductions and exemptions. This is something that China implemented that allowed to build a stronger local investor base. And then secondly, also look at opportunities to encourage institutional investors, for instance, to allocate a proportion of their portfolio to climate investments, which is something that was introduced in EU countries. On the partnership side, again, bringing together investors and issuers through dialogues or platforms in a way that investors are more engaged early on in the overall investment preparation process. So for instance, engaging investors before the issuance of green bonds to allow investors to know more the entity, the issuers behind the project. And then finally, also strengthening the capacities of investors to be able to identify and screen robust green proposals in a way that it allows them to develop over time more recurring pipelines of green investments in their portfolio. So I'm going to skip the analysis of the domestic banking sector, and I'm just going to recap the recommendations that we heard also at the beginning. And again, the focus here is to create a level playing field to encourage more recurrent pipelines of climate finance deals over time. So again, the focus here is on establishing more policy coherence and coordination across government ministries, focus on implementing effectively the existing regulations and particularly the taxonomy. Is also about investing more in the sustainable, in the climate finance data architecture. And then one important point is to leverage more successful models from early adopters. We heard before about some of these innovative approaches in the equity space, but also unbanked successful issuances. So there is definitely room to scale up some of these models. Then again, on capacity building the capacities of the entire ecosystem. And here, this is where development partners, including MDBs, can especially play a critical role, particularly in terms of providing technical assistance to issuers and across the overall project preparation. This can include, of course, supporting issuers on the development of frameworks, project pipeline development, and alignment with standards. And MDBs especially can play a critical role as anchor investors to try to mobilize catalytic capital and also crowd in more local investors. They also have a critical role to provide risk sharing, the risking mechanisms, including guarantees and blended finance. And we heard before the example of Cambodia on how they were able to, on how the whole system came together. And then finally, one last point about using incentives both to reduce the cost for issuers, but also to make climate investments more attractive for investors. And the experience of other countries in the Pacific has shown that incentives work well, both for countries that at the beginning of establishing the markets, and also countries that are already far ahead and are already in the process of deepening the existing climate finance markets. And there is definitely a wide range of incentives that go from tax reduction and exemptions to subsidies and grant schemes to cover the SPO and external certification cost for issuers, to also waiving the listing fees for companies that want to list their bonds on the exchange. And this is actually something that Mongolia has already introduced on the stock exchange. Now, just to finish with one last slide about not forgetting to look at the broader sustainable finance ecosystem as a whole. And I know that this is a complex chart, but where we want to draw your attention is essentially on the fact that there is a wide range of stakeholders involved in the whole investment, in the whole climate investment landscape. And one of the main recommendations that came from the discussions, but also from our experience in the region, is essentially to have local verifiers. And the reason is that to establish local verifiers has a lot of advantages, in essentially because they generally know well the local market, they operate in the same language and in the same time zone, and most importantly, they usually offer lower fees compared to international counterparts. So it essentially allows from one side to reduce the cost for issuers, and on the others to also reduce the time to reach the market. And in order for this to be successful, the focus is especially on developing and investing in capacity building for in order to have a very well qualified local talent. So really, in order to be able to have local verifiers that can make credible assessments that from one side promote more confidence for investors, and on the others, they try to address some of these information asymmetries and greenwashing concerns in the market. So I'm going to stop here. And we have prepared actually a few questions to guide our discussion. I know that we are a bit behind with time, but again, we would be very happy to hear any thoughts or reactions from your side in terms of any additional recommendations that we could consider to increase the demand for climate finance deals in Mongolia and address some of these investment risks that we heard, or any other types of policy or regulatory reforms that can be put in place to improve the current regulatory and policy environment. So I'll stop sharing my screen, and thank you again for the invitation, Urgo, and for your participation.
Well, thank you so much. It was so insightful. And before we are opening floor to everyone, those who wanted to ask questions or make comments, please state your name and organization. And well, floor is open. Is there anyone who wants to make a comment or question? Or
A lot of information to digest.
still okay.
Still setting in.
Okay.
I will just note that I've put a link here in the chat as well. So for those of you who maybe have some thoughts after this, we do have a survey. Just, please provide us your feedback. But at the end, there's an open spot too. So if you have something you think, oh, maybe this was incorrect, or, we'd like to see more findings in XYZ, let us know. Or if there's any other areas where you think are, low-hanging fruits that could be an opportunity for us to work on in this next phase of the programming, moving from this research to the programming, that would be wonderful to hear. So
let's break the ice, and I have prepared answers. So I'm going to share my, give me one second. In the meantime, seriously, if you guys have any question, please do so. Ask. Do you see my screen?
Yes.
Okay. Well, our first question was, how can Mongolia align its securities regulations with international standards, right?
Yeah.
All right. I just highlighted the only 3 points. And first one is facilitate the capacity building for market participants, such as this kind of webinars and seminars we can do. And second is strengthen the collaboration with international organizations, such as like ICME, Asian Capital Markets Forum, and United Nations, and ADB, and so forth. And last one is adopt and adapt and global best practices. So we should formally adopt like internationally well recognized principles into our regulatory benchmarks. So that was my answer to first question. Is there any Mongolians who would like to add on to those answers? All right, moving on to second question. For the record, our association already translated the ICMA, those principles. It's on our website. So our audience wants to read about it in Mongolian and English. Please visit our website. Okay. This is how we are trying to kind of align our securities regulations with international standards. So the second question was, what regulatory or policy change could enhance investor confidence in Mongolia's sustainable finance instruments, right? Is there anyone would like to add? Deanna, like, what's your thought on this question?
So yes, so what regulatory changes could enhance investor confidence? I think some of the things that we mentioned already in the recommendations, some of these incentives, also, I mean, I'm not really for disincentives. Sometimes that's another approach governments take, kind of the stick approach rather than the carrot. But I do think having tax incentives, we've seen this in other countries where there are tax incentives, particularly for investors in some of these securities, that's also an opportunity as well. So I think that would definitely be something that could be enhanced.
Okay,
Yara, what about you?
I'm glad we are on the same page, because our association's representative are in the part of the working groups who are working closely with the Minister of Finance. And last week, actually, they were in a parliament building. They were attending those, how to incentivize the tax environment for investors.
The other thing that we've seen in some countries is the development of these guarantee schemes. In Cambodia, for example, they have, under the Ministry of Finance, they have the Cambodia Credit Guarantee Association, and they provide guarantees usually to the banking sector. But the banking sector is now also looking at increasing their green lending. So that's an opportunity there for those guarantees to be put in place. They get the funding from the Ministry of Finance, but the Cambodian Credit Guarantee Association is also providing guarantees to some local issuances as well. So this is an opportunity as well to develop local guarantees.
Okay, well, thank you. And
I think on incentives, just to complement what Deanna was saying, our general suggestion is that the focus here is to make sure that they do not create any market distortion. So I think that there has been already some research done by IFC that showed that financial institutions and investors react better to incentives rather than they're encouraged more through incentives rather than through the stick, as Deanna mentioned, through the regulations. But there is, in general, I think there isn't, I think, like a one size fits all. So it very much depends on the context. What we have seen is that incentives work well both at the earliest stage to establish the market, and also in cases such as Thailand, where the market has already been developed and is in the process of scaling up and introducing more diversified instruments. I think what we have seen is that there is really a wide range of instruments that can be put in place, and really being able to have tailored interventions that look either at the demand side or at the supply side. I think, yeah, it requires just some thinking around what works well depending on the context.
All right. Duly noted. We sometimes need carrots, sometimes need sticks. So let's use both. All right. Oh, this question was strictly for us, right? How can a securities association collaborate with banks and development partners to reduce perceived investment risks? So I also noted only three points here. So first one is establishing the risk mitigation mechanisms with the banks. And second one is partnering with development institutions for risk guarantees. And third one is improving market transparency and investor confidence. So those are my highlights. Is there anyone would like to add on to it from our audience? Okay.
I fully agree with these. In terms of the risk guarantees, one thing I wanted to mention, we do mention this a lot in our recommendations, and I just was mentioning this from the Cambodia example. The only challenge with this is that it does increase costs. So this is something that needs to be considered, and you know, already it's costing a bit more, particularly when we're looking at green issuances. So how can we manage that? This is something also in terms of, you know, policy incentives that can hopefully try to take down those costs as well.
Right. It's all about purchasing power, right? So our association has like 90+ members. So hopefully in the future, we can like bundle up, especially the second party opinion is kind of costly.
Yeah.
So let's gather together and purchase one package. And
this is actually what we did at SCAP, I will tell you, because with the accelerator that we're doing in Cambodia, we used that kind of approach where we're doing multiple issuances. So we're being able to kind of really negotiate quite a good price.
Okay, we need that experience. Okay. Well, moving on to next question. Oh, would the risk sharing mechanisms encourage more private investment? Yeah, definitely, right? So it will reduce the perceived investment risks. Like if there is a government-backed guarantees, an investor would be more confident. And second one is improving capital market liquidity and lowering cost of capital. And third is expanding investment into high impact sectors besides the infrastructures, right? So yeah, it will definitely encourage more private investment. I would like to see more projects. Yeah, I found this on from internet. Right now, our energy sector is kind of working towards the sustainability and renewable energy in Mongolia kind of snapshot. And credit goes to Mining Journal. So, yeah.
This is excellent, Urgo. So thank you so much for sharing this, and we'll make sure to include it in our final drafts. And also, as Deanna mentioned, we will organize one more workshop to publish the final findings of the reports. So we also welcome everyone's participation at this workshop. We would be very happy to hear your feedback there, and perhaps after we'll give you after a few weeks to digest a lot of the content that we presented today, but we hope to be able to continue our engagement.
Well, is there any closing words from Deanna?
I do see a question here in the chat, actually.
Oh, okay. Sorry, I didn't realize that.
Yeah, it's from Animara. Sorry if I'm pronouncing your name correctly. They mentioned about tax reductions and exemptions, and it says in Mongolia, tax benefits can only be applied if there's a legal amendment. So is there a possibility for climate investment and related funding sources to be eligible for tax incentives without a regulatory change? So I think this is a question to the government, but I think from my perspective, if this is where the regulation currently stands, no, there would need to be regulatory changes. And this is also where you see some countries where they've put these tax incentives into law. Cambodia is also an example of this. They do have some tax incentives in place for such listing and investments. So these are things that I think can definitely be considered in Mongolia and would need to be put in place in terms of policy change. Kara, any additions to that?
Maybe I can use China as example, where it was also, again, a very much top-down approach. So it was the regulator that introduced these tax benefits for investors, and then this all allowed to have this cascade down approach. But yeah, it involved some changes in terms of the existing regulations.
Okay.
I will say this is where SCAP works. We do work with particularly the governments to support regulatory measures. Mm-hmm. So this is something definitely where we're looking now at the next phase is something that we definitely will be looking at opportunities of how we can work with the government, where they see, the best approach going forward. Of course, this is not our decision, it's the government's decision, but where we can support on these types of measures, we are definitely there to support.
All right. With that, on behalf of Mongolian Associations of Securities Dealers, I would like to extend my sincere gratitude to SCAP, especially Deanna and Kara, for their insightful presentation and valuable contributions to today's discussion. And your expertise has provided us with a deeper understanding of sustainable finance and opportunities for Mongolia's capital market. This webinar marks the first of 11 sessions planned for 2025. We are excited to continue these important conversations throughout the year. We look forward to facilitating and actively cooperating on ISCAP's projects and programs in Mongolia, ensuring that our collaboration leads to meaningful progress in sustainable finance and capital market development. Thank you all for your participation, and we look forward to seeing you in the future sessions. Thank you all.
Thank you.
Thank you, Urgo. Thanks, everyone.